Alright, good afternoon traders. This is your free video from seasonalswingtrader.com. Today we're taking a look at GDX, or the Goldminers ETF GDX. The overall market is selling off today, down 23.5 points at 23.46 and change on the E-mini S&P. Looking at GDX today, we're trading at $23.38, up about 2% for the day. Gold futures, the April gold contract, up 10 points at 12.44.5. So looking here at the daily chart here, we can see that we are getting a nice little bounce here out of this small consolidation. We've got our averages starting to point higher, the 9 and 15, both turning up at the 50% retracement level. You look at our momentum oscillators down here below, we are turning up and pointing higher. We can see back in the past that we've gotten these buy indicators back here before, although they have not really lasted. We did get a pop higher, we sold off. We did get a pop higher, sold off, did get a pop higher. This one did sustain itself. You can see that we've had exhaustion here, up here at the $25 level. Today we're breaking a trend line here on the daily chart. Price action is up above the 50 and 100-day averages. Also converging here right along the 50 and 100-day is the 200-day. So we're at an important inflection point here on the daily. We need to see a continuation and a close up above this trend line for higher prices. But if we flip over here to the weekly chart, this is what has me most interested. If we take a draw a Fibonacci extension from the high put in place back in August and the low back in January of 2016. So we've got the last major swing high, last major swing low here. You can see that we are bouncing and testing right at the 50% retracement level. So a ton of past price action here, as you would suspect, at the all-important 50% retracement level. Last week we did have a nice little reversal here at the 50% retracement level, came back, bounced off this minor trend line, and we're cracking out of this small triangle here. Now, if you look bigger picture, you can see that we've got a head and shoulders top formation that did form and trigger here right around the $23 level. So up here we've got a $32 head and a $23 neckline here. So 32 down to 23 is projects a $9 down movement on a crack below the neckline here, which we did get here this week in last November of 2016. We came down to $18 and change. We'll call it 19, so we didn't quite meet our $14 price objective. But interestingly enough, $14 put us back here at these lows. So although we did not come down and meet the $14 level, that trade would have paid you, or at least would have gotten stopped out at break even at worst, as we retrace back up to these levels here. But now we are looking more at a bullish picture with the economic uncertainty. I think there's a little bit of flight to quality going on today and the last couple of sessions. If we continue to see market sell-off in the broader market indices, we could see more bids in gold, which should boost us higher. Here, this triangle here would take us from 26 down to, we'll call it 19, which is a $7 range. So if we're breaking out here at the $23 level, $7 higher should ultimately take us up to the $30 level, which would make sense. It's a nice round number, and it takes us back up to near these highs. So remember, if we continue to see more pressure, more weakness in the equity markets, we could see higher prices in gold. Now, from a seasonal standpoint here, we can see that it's not such a bullish picture here. We've got more sideways to flatlining type activity, but that's okay. You can see here over the next 4 weeks or so, we've got about a 3% projected downturn over the last 3 weeks. So that's about 50 cents or so from where we're trading today. So we're trading at 23.5. That take us down to the $23 level. If we go out and look at approximately 45 days, we're pretty much flat. We've fallen about 0.5% or so. This is all based on the last 10 years of performance. If we go out to 2 months or 8 weeks of trading activity, we have again shown that we fall approximately 2% or so over the last 8 weeks. Will that keep me out of this trade? Not necessarily. There are lots of ways that we can do this. Again, 2% is going to take us down to $23, slightly below $23, depending on where we close. Okay, if we come over here to the option chain, we have a couple of different scenarios that we could look at depending on your flavor of trading. We could look to sell at the money, slightly in the money, or even out of the money put spreads. If you have enough capital in your account and do not mind taking delivery of these shares, we could look at selling some cash secured puts for some decent income outside of the money. Otherwise, we could look at buying the stock, buying GDX outright here at 23.40, and selling the 23 halves against it around 80 cents. If you're trading multiple lot shares, meaning you're buying in shares of 100, we could look to ladder these out by selling the 23 halves, 24 and 24 halves. We can also go down the ladder some with smaller days left till expiration and sell calls against our position and collect premium along the way. So those are some ideas to think about. We'll see you next time. I want to remind everybody about Trade Thirsty's event this coming Saturday, March 25th, 2017 from 9 a.m. to 1 p.m. Eastern. 3 men and a lady. We've got 3 professional trader gentlemen and 1 professional trader gentlewoman. Kicking off the episode here will be Johnny Seville at 9 a.m. from acornwealthcorp.com, followed by Brian Stickney with CompleteCurrencyTrader.com, Mark Sachs, which is a first-timer to Trade Thirsty's panel, from RightLineTrading.com, and then we welcome back Tony Hansen from TradingFromMainStreet.com. Register at the link above, and we hope to see you there. Traders, like what you see? Want more trade ideas each week? Take a $7 30-day complete member access trial by clicking the link below. You'll have immediate access to analysis and seasonal trade ideas on over 35 commodity and currency futures markets, as well as coverage on all of the major stocks, exchanges, and ETFs in the U.S. marketplace. If you like us, follow us on Twitter and Facebook, like us on YouTube, and we hope to see you on the inside.